The market just paid nearly 20% for Supermicro computer and charged almost 9% for GE Vernova. The Nasdaq 100 slipped about 0.5%. The industrial ETF barely moved. That split is the whole session. Supermicro sells to computing boxes. GE Vernova supplies the power and grid equipment behind them. Wednesday's close priced their risks separately. My read is simple. Basket level exposure lost explanatory power. Company-specific repricing took over. Supermicro's preliminary update created a violent repricing against a weak Nasdaq 100. GE Vernova reported strong growth and raised guidance, then closed at the low of the day, while the industrial sector finished flat. Broad fear faded into the bell. That gives us a clean portfolio question. Are these moves expanding into their indexes, or are they isolated gaps that need fresh company evidence to survive? The answer sits in the levels each name printed on July 22nd. Supermicro released an unaudited preliminary fiscal fourth quarter update after the prior session. The company placed revenue near the low end of its $11 to $12.5 billion guidance range. That was the soft part of the release. The margin estimate changed the tone. Supermicro estimated GAAP and non-GAAP gross margins between 15 and 17%. Its prior guidance had been 8.2 to 8.4%. That sharply changed the economics implied by the update. The company also reported more than $60 billion in new orders and backlog. Management warned that orders can be delayed or canceled, so backlog is demand visibility rather than cash already collected. Final fiscal fourth quarter results are scheduled for August 11th. The combination mattered. Revenue near the lower edge of guidance, a much stronger preliminary margin range, and a backlog figure large enough to change the debate. The release established the business facts. The completed session established what investors paid for them. SMCI came into the session from a $25.50 close. It opened at $28.89, traded as high as $32.28, and finished at $30.56. The gain was 19.84%. The useful detail is where the stock finished inside that range. Buyers held most of the opening gap, yet the close remained below the $32.28 high. That leaves a wide decision area instead of a clean breakout with empty space underneath it. I care about $28.50 first. That was the session low and the lowest price buyers defended after the update hit the tape. A close below it would put the gap under pressure and bring the $25.50 prior close area back into the conversation. Above it, the market is still carrying a meaningful portion of the repricing. The other side is $32.28. A close to that high would show buyers accepting the new range. A rejection there would keep the stock trapped inside Wednesday's volatility. The Nasdaq 100 did not travel with SMCI. It lost 0.54% and closed at 28,998. The session high was 29,176.91. That divergence changes the interpretation. A broad AI or duration bid would normally leave a footprint across the index. Wednesday delivered the opposite shape. A hardware name exploded higher while the large cap growth benchmark finished lower. Supermicro's move therefore belongs to Supermicro until the Nasdaq 100 starts clearing its own levels. The practical test is a paired close. SMCI above $32.28 while the Nasdaq 100 closes above 29,176.91 would broaden the message. SMCI holding its gap while the index stays below that level keeps the move company specific. SMCI losing $28.50 while the index remains weak would tell us the gap is unwinding without help from the broader tape. This distinction matters for anyone holding the theme through an ETF or a group of related names. A dramatic single stock move can make the whole trade feel healthy. Breath was missing. GE Vernova reported second quarter orders of $24.2 billion, up 88% organically. Revenue was $11.1 billion, up 22% as reported and 12% organically. Net income was $600 million, and adjusted EBITDA was $1.2 billion. The company also reported a $13 billion sequential increase in backlog and raised its full-year guidance. Yet GEV fell sharply, so the operating report and price reaction point in opposite directions. Large projects convert backlog through delivery. GE Vernova posted strong growth and still closed at the low. The chart sets the next test while seller motives remain unknown. GEV entered from a prior close of $1,078.81. It opened at $1,021.01, reached $1,038.99, and closed at $985.03. The close matched the session low. The loss was 8.69%. Closing exactly at the low is different from a midday flush that buyers repair before the bell. Supply remained present through the final print. That makes $985.03 the immediate line. A close below it extends the repricing. A recovery above it only returns the stock to Wednesday's range. The serious recovery test is $1,038.99, the session high. Reclaiming that high would recover most of Wednesday's range. Staying below it leaves the sellers in control of the range. Strong orders did not stop the sell-off. The next useful information comes from whether GEV can stop closing beneath its recovery levels. XLI gained 0.11%. Its session low was $178.14, and its high was $179.84. That is a flat sector tape beside an 8.69% loss in GEV. The industrial ETF gives the GE Vernova move the same treatment the Nasdaq 100 gave Supermicro. It refuses to turn a company reaction into a sector conclusion. If investors were broadly marking down industrial capital spending, XLI should have carried more of the damage. It did not. The pair test is straightforward. GEV reclaiming $1,038.99 while XLI closes above $179.84 would show improvement in both the name and its control. GEV staying below $985.03 while XLI holds above $178.14 keeps the damage isolated. A broad industrial break below that XLI low would change the character of the move. For now, GEV is a company problem inside a stable sector. That is useful information for diversified holders. It says the ETF did its job while the single name carried the event risk. The S&P 500 lost 0.14% and closed at 7,498.96. Its session stretched from 7,485.85 to 7,525.94. The broad index absorbed the violent single-name reactions and still finished close to where it opened. VIX completes the picture. It opened at 17.42, reached 19.49, and closed at 16.64. The close matched the session low, leaving VIX down 2.35%. That intraday reversal matters. Traders bought volatility while risk felt unstable, then sold it into the close. The final print did not carry a broad fear premium. The single name gaps still carry risk. The closing tape kept that stress concentrated. I am watching 7,485.85 on the S&P 500 and 19.49 on VIX. And S&P closed below that low with VIX above that high would widen the story beyond company earnings. And S&P hold near 7,500 while VIX remains below 19.49 keeps the market backdrop orderly enough for the single name levels to matter most. The broad tape keeps the analysis specific. Infrastructure demand reaches servers and grid equipment, but cash flows arrive through different margins, contract terms, and delivery schedules. Supermicro's update concentrated attention on gross margin and backlog. Investors could compare the preliminary economics with prior guidance and reprice the stock immediately. GE Vernova's release carried strong orders and higher guidance, yet the stock closed at the low. Large projects take time to manufacture, install, and convert into cash. A growing backlog can raise both future opportunity and current execution pressure. This is why a theme can be right while individual positions move in opposite directions. The theme describes demand. The stock price discounts demand, margins, timing, financing, and expectations together. Wednesday's divergences say investors are sorting those pieces company by company. For a portfolio, that argues for matching exposure to the question being asked. The Nasdaq 100 measures large cap growth participation. XLI measures whether industrials share GE Vernova's weakness. SMCI and GEV show whether their own disclosures change the price investors will accept. Blending those questions into a single infrastructure trade hides the part of the risk that just moved. My base case is continued dispersion. SMCI stays inside the $28.50 to $32.28 range while the Nasdaq 100 remains below 29,176.91. GEV stays below $1,038.99 while XLI remains inside $178.14 to $179.84. That map says company information still outranks the basket. The broadening case needs paired rates. SMCI closes above $32.28 while the Nasdaq 100 closes above 29,176.91. On the downside, GEV closes below $985.03 while XLI closes below $178.14. Those pairs would extend the single name reactions into their controls. The reversal case attacks Wednesday's reactions. SMCI closes below $28.50 and opens a test of the $25.50 prior close area. GEV recovers through $1,038.99. That combination would unwind the cleanest parts of the session's dispersion. The broad market invalidation sits beside those company maps. The S&P 500 closes below 7,485.85, while VIX closes above 19.49. That would promote market stress from background risk to an active driver. These conditions form a conditional decision framework. Price has to earn every branch. Supermicro is scheduled to report final fiscal fourth quarter results on August 11. The final release can replace the preliminary ranges with completed figures and add management detail around customers, timing, margins, and the more than $60 billion order and backlog statement. For GE Vernova, investors will keep testing the raised full-year guidance against order conversion, project execution, and cash generation. The July 22nd release established strong reported growth. Later filings and earnings updates will show how that growth moves through the income statement and balance sheet. The market calendar matters because both stocks just made large moves on company information. Fresh company disclosures carry more authority than sympathy moves from neighboring names. Until those arrive, the capture levels provide the cleanest way to judge whether Wednesday's repricing is being accepted or rejected. The lesson from this close is that demand stopped being enough. Infrastructure demand can remain strong while individual stocks reprice in opposite directions. Supermicro gained 19.84% while the Nasdaq 100 fell. GE Vernova lost 8.69% while industrials finished flat. VIX touched 19.49 and closed at 16.64. The completed tape kept those company reactions separate inside a theme that had been trading as a broad bundle. Watch the pairs. SMCI and $32.28 beside the Nasdaq 100 and $29,176.91. GEV and $1,038.99 beside XLI and $179.84. The S&P 500 low and the VIX high decide whether the story stays concentrated. At close below 7,485.85 in the S&P 500 with VIX above 19.49, would turn this company-specific tape into a market-wide warning. Subscribe for the next post-close map. This is market news and education, not financial advice.